Welcome to China Events, I am Jason. Earlier this week, Fitch downgraded the U.S. sovereign credit rating. Fitch criticized the U.S. bipartisan in the process of policymaking excessive struggle, excessive spending and excessive tax cuts, so that the U.S. financial system in many uncertainties. Although Fitch has downgraded the U.S. rating, but market analysts believe that the U.S. bipartisan this will be ignored. Fitch downgrade U.S. ratings will only exacerbate bipartisan strife. Fitch said that the two parties have been fighting one after another, triggering concerns about the ability of the United States to solve the ballooning budget deficit. And every time Congress prepares to discuss spending for the next fiscal year, the two parties don't consider policies that could effectively address the problem, raising taxes or cutting spending on major programs like Medicare and Social Security. Biden administration officials have lambasted Fitch's decision and accused the Trump administration of destabilizing the U.S. political system, pointing to their own deficit reduction efforts. Republicans, for their part, have argued that Democratic spending programs have derailed the economy and doubled down on calls for budget cuts, which have been rejected by the Biden administration. The size of the U.S. federal government debt has reached $32.659 trillion, according to the latest figures released on the U.S. Treasury Department's website. They have added $392.75 billion to the U.S. debt in just 1 month. Such a rapid expansion of the debt has also brought the U.S. quarterly interest payments on the debt to nearly $1 trillion. In fact, in June, the size of the U.S. debt already exceeded $32 trillion, and in January of this year, the U.S. debt was then touching the $31.4 trillion debt ceiling, and then the U.S. Treasury Department used unconventional measures to avoid a debt default. If this trend continues, it is predicted that by 2030, the size of the U.S. national debt may be more than $50 trillion. I have to say that the U.S. debt Ponzi scheme inflated too quickly, now $32 trillion this figure than the Americans in the new crown epidemic before the forecast also came 9 years in advance. Let's say the U.S. debt reached $20 trillion that year from $10 trillion in 9 years, and rose to $30 trillion from $20 trillion in 4 years, and if it continues to be printed this way, the dollar will be completely worthless. Many countries began to throw the U.S. debt, and began to look for non-dollar currency settlement. More countries worried about the U.S. bad reputation began to ship back to exist in the U.S. gold. It must be said that the world economic and financial trade order dominated by the dollar is going downhill. In the global inflation rate gradually rising background, gold with stable, value preservation characteristics active in the international financial market. Many families even began to consider in the home reserve some gold in case of emergency. They think that if encountered a critical situation, paper money lost value, perhaps gold can save lives. In the international financial market, countries are also eyeing gold. The Federal Reserve had 3 times refused to Germany to redeem 1236 tons of gold. Not only that, China's remaining 600 tons of gold in the United States has repeatedly requested to retrieve from the United States. The United States gave the answer surprisingly, refused to verify. Germany, in order to be able to better develop foreign trade, not due to foreign exchange transactions and restrictions, will be 1,236 tons of gold delivery to the United States. Our country also in the United States were 600 tons of gold stored. According to statistics, the total amount of gold stored in the United States by many countries in the world is as much as 8,000 tons. The German side also tried to gradually transfer the gold back to the country, but it was rejected by the American side. Germany has 3 times to the United States to send buyback application, the United States to unknown reasons to put off the past, and refused the German request for verification of gold. The United States of America's various actions make Germany feel very angry. After a number of pressure, the United States returned to Germany 5 tons of gold. But for thousands of tons of gold is still being stored in the United States in New York underground vault. This matter let Germany feel very distressed. The U.S. side of this action triggered the international community's dissatisfaction. Many countries believe that the U.S. side of the violation of the transaction credit refused to return the gold stored in the United States, and unreasonable reasons for refusing to verify the gold. U.S. Congressman Marjorie Taylor Greene of Georgia in July 30 again boldly to the U.S. Treasury Department and the Federal Reserve submitted a draft, calling for when the world is developing a digital currency anchored in gold, the U.S. should return to the gold standard as soon as possible, so that gold has become a substitute for U.S. debt to determine the value of the dollar anchors. She mentioned in the draft that the period when the U.S. was on the gold standard did not result in the Great Depression, but now with the U.S. facing multiple financial threats and at a time when the Federal Reserve is triggering a financial debt crisis in the U.S. is in the throes of an impending recession. The gold standard will prevent irresponsible spending habits and the creation of dollars out of thin air in the U.S. in order to recoup the loss of credibility that the Fed and U.S. Treasury-dominated dollar has caused after the damage it has inflicted on the current sound monetary system. Once the U.S. returns to the gold standard, it will quickly minimize the damage to the dollar and the U.S. economy caused by inflation, soaring debt and instability in the U.S. financial and monetary system, which can be observed in the fact that central banks around the globe are currently selling U.S. debt at the fastest rate in 9 years and hoarding gold at the fastest rate in 55 years. It is clear that the U.S. is finally suggesting that a return to the gold standard will become even more necessary at this critical juncture, and these moves reflect a return of gold's monetary value to the fringes of the U.S. monetary historical horizon. Is this critical moment another thing out of the market unexpectedly? According to the U.S. Financial Research Institute, Zero Hedge in July 30 cited in a new industry report, is now caught in the need to continue to raise interest rates to fight inflation, so that the U.S. banking crisis concerns increased. Caught up in the U.S. recession is expected to the Federal Reserve, has been unable to do anything or dare not prevent countries to ship back the gold belonging to their own countries. Even if the Federal Reserve has refused several times before, including Germany, China, Venezuela, Turkey and other countries to ship back the gold requirements, and even the outside world has always suspected that some countries of the gold reserves material will be diverted by the Federal Reserve, lending and melting, or to do with it, but the Federal Reserve, in order to protect the credibility of the US dollar and US debt, and ultimately will have to need to be returned to the gold as much as possible, because we have repeatedly emphasized that the gold reserves of these property rights are very clear. When the global central banks really need to address the soaring U.S. debt and financial system risks, the dollar's dominant role will be reset phenomenon will occur, although the U.S. Treasury Department and the Federal Reserve believe that they are able to defend the status and value of the U.S. dollar and the U.S. debt, but the history of the currency tells us that they cannot control, and even more so, they cannot print gold. The world financial system is experiencing a monetary divorce from the dollar hegemony. The dollar is on the verge of a historic collapse. The world will move towards a new financial system anchored in strategic commodities such as gold combined with central bank digital currencies, that is, not a dollar-dominated world. Therefore, only from this point of view, the maintenance of the dollar's status as the main currency for the United States is self-evident, because the collapse of the currency is often preceded by the decline of the country.